you can look to buy. Stock is at 500 odd, 505 odd rupees for itself. It's just that it's a thinly traded counter, so you have to keep mindful of that it's a low liquid stock. But then it's nearing a breakout of its 50 and the 200 moving averages. So short-term patterns for Godrej Agrovet are not very attractive, but they're not bad as well on the downside. And I think with the breakout, which eventually would happen, assuming the stock consolidates for another couple of weeks, that should trigger more positives for the stock price. So I would suggest a buy.
All right, this one is from Shanti Shedela, and he's actually tried to quiz me by writing scientific sequence, but it is sequence scientific, I know that. He's bought some 302 odd shares at the price of around 138 rupees per share. He wants to know whether it's good to continue accumulation at recent lower levels, or are there any chances for this particular counter to go much lower than what it is right now? What's your take on this one, Kunal, sequence scientific?
I would suggest an exit. I don't believe that the stock would probably get into any kind of a main recovery mode or a reversal mode in terms of the trend. The stock made a high somewhere in the first 2-3 months of 2021 when it was at 300 odd levels, 325, and from there the stock has been consistently falling. So even at current levels where the stock is at 96, there has not been any major recovery. So such kind of stocks are the ones which you should definitely avoid, especially from a longer term play.
We've got Akash from Delhi who's asking a question on Paisa Digital. This one's for you, Vikas. And he's asking specifically about the corporate action which relates to the stock split.
Unfortunately, the other two stocks I was tracking, but this stock I do not track. So I do not actually track this stock and would not be able to offer my comments here.
All right. But then in that case, I'm going to ask about Gland Pharma. We've got a question coming in from Gargi. She's writing from West Bengal and she's asking for a medium-term view. I'm guessing that means definitely more than a year. And she's asking whether she should accumulate at these levels, Vikas.
Yeah, it's a good quality pharma company. Although the sector is not performing, it's been laggard and it's not been able to outperform the benchmark indices. But still, within the pharma space, this company is a good stock to own from a long-term point of view. And the stock has also corrected from its highs and trades at reasonable valuations. So I would recommend holding on to the stock or looking for buying opportunities on declines.
This next query that I have is for you, Vikas. This one is coming from Sriram. He's writing to us from Chennai. And he's saying that he's holding shares of Saint Gobain Securit. He's purchased it at 90 rupees per share. He wants a fundamental view on the counter. He's ready to hold on for the next 3 to 4 years. And do you think, Vikas, that this counter makes sense to be held on for the longer term? How are the fundamentals? Do you track it?
Yeah, this is a great company. Fundamentally looks good, trades at pretty good valuations, and it has also come down in line with the correction in the markets. I think if one is a long-term investor, one need not worry, and this stock would certainly bounce back. So I would maintain a hold on this stock.
Okay. Any view on RPSG Ventures, Kunal? We've got S. Ghosh, who's a senior citizen writing in from Delhi, and he's bought at levels of 650. The stock is currently trading at just above 500. Do you have a view on the charts?
Well, apologies, Alex, I don't track the stocks, so won't be able to recommend.
Vikas, any chance that you have coverage of this, or is there anything that you can tell us about this counter?
Yeah, it's a company owned by the Sanjeev Goenka Group, RP Sanjeev Goenka Group. It's a good company. It actually holds around 50, I think close to 55% stake in the software solution company, First Source Solutions. And that brings the value in this company. And apart from that also, the company has several other businesses. They own a Quest Mall in Kolkata. The stock is also corrected, and they are also the owners of the Lucknow Super Kings, the IPL franchisee. So I think at the current levels, the stock can be held on to, and on declines, it can be bought onto. There is a pretty good value in this stock.
Okay, this one is also for you, Vikas, I'm sorry. This one is on Page Industry, and Kadir is writing to us that of late he's seen news reports about promoters paring stake in Page Industries, which we all are aware of. He wants to know, how will this affect this, the stock fundamentals in any way, and does it make sense to stay invested in this one?
As far as Page Industries is concerned, it had been a truly great wealth creator. People who had invested in it from a long-term point of view have really minted money. But say promoters selling some stake in the company can certainly lead to a short-term correction in the stock. The stock would certainly fall because of that, but it's a good quality company and most of the hosiery stocks are doing well. This stock also has corrected from its highs, although trades at very expensive valuations, but quality always comes expensive. So I think one should hold on to this stock at these levels.
Interesting question coming in from Anjali. She's writing in from Nashik, and this is also for you, Vikas. This is a fundamental view that is being sought on force motors, and she says that the concept of long-term does not always work, and which is a fair assessment, I would think. Wouldn't you say? Force motor has never been a very big player in the volume game, right, in the automotive space, but I mean, you could call it a niche player. Would you say that there is still a case to be made for an investment and a hold in this? I believe she bought at levels of 2,500.
Her buying price is exorbitant. She's sitting on huge losses. The stock trades at close to 1,000 rupees only today. At the current levels, I think one can hold because the auto sector in itself is looking great. We've seen the markets tanking over the last few weeks or months, but the auto sector has been doing well, and some of the stocks from the sector like M&M and Maruti are just touching new highs every day. So I think Force Motors is a stock which can be held on to. But if you were to ask me to invest in some auto company at these levels and auto OEM, then I would prefer a Maruti or a Ashok Leyland at these levels.
Right, I have a couple of actually long-term queries only, but Kunal, I vetted out this one for you, and this one is from Neeraj Kumar, and he has 500 shares of HDFC AMC at 2,200 rupees per share. He wants to know what sort of a target can he look at for HDFC AMC with a one-year view.
See, the stock has been beaten down significantly. The all-time high levels for HDFC AMC, if I'm not wrong, was closer to 3,600, 650 mark for itself. And from there, the stock is now almost at 1,750 levels. But then, the correction has also been, quite intense for the stock price, which makes the risk reward to buy, the stock at current levels also quite attractive. The only catch is that how much time would the stock would take for itself and the trend to reverse, for HDFC AMC, because HDFC AMC generally tends to do pretty well in best of the market conditions when the mid cap in the market are doing exceptionally well. So we'll have to wait out for maybe some more time for the markets to ease out of this pain. And once the mid cap end of the market gets more buoyant, I believe that's where the time HDFC AMC could continue to start showing a lot of traction. So you can buy at current levels, 1750 odd. It's a good risk reward to buy, but you'll have to hold it from a longer term time play.
Kunal, the next counter is Ambika Cotton Mills, and we've got a question coming from Murli. He's writing in from Palakkad, and he's holding at levels of 1913, which is elevated levels. He points out that the stock has dropped quite significantly over the last 3 months or so, and that is indeed right. Since March, it has dropped quite substantially. Would you say that he should hold on from the perspective of the next 3 months? Should he expand his time horizon?
I think you should hold on to it for not just 3 months, but I think beyond that as well. And I think you've not bought at the extreme end of the price trajectory for Ambika Cotton. I think if I'm not wrong, the previous major highs for the stock was around 2,700, 1,900s or thereabout. It was just about the recent low for Ambika Cotton. And I think from there, the stock has fallen a bit more sharper, but then it's trying to consolidate as well. So I would suggest to hold on if possible, and if the stock corrects and say comes back towards the previous month lows, the month of May lows, which is closer to 1,200, 1,250 mark, I think that's a good level we can look to average further.
All right, this next query that I have is coming in from Sukanya, and she wants to know if Indiabulls Real Estate is a good buy for the long term at current market price. Vikas, do you think that Indiabulls Real Estate would be the best bet in the realty space at current market price, or should Sukanya look at some other counters altogether?
Yes, it used to be looking good. This stock, I was bullish on this, but the stock has really disappointed. Actually, there is an impending merger of this company with the Embassy Group, and once that happens, then things should look better for this. But still, there is no clear-cut indications of that happening or the time frame within which it could happen. So, and the group stocks are really not doing well. So, I would not say this is the best pick from the real estate space. If one wants to enter into the space, I think one should look for companies like a Godrej Properties or a Oberoi Realty, which look better if one has a long-term point of view and wants some consistent, decent returns.
You pointed out, Vikas, that you're positive on Ashok Leyland. We've got Manikandan, who's bought Ashok Leyland at levels of 115. He's asking whether he should hold on to this or should he book and buy something else for the long term.
Alex, as I was mentioning earlier, Ashok Leyland is one of my favorite picks from the auto OEM space, and the stock has really done well. Even in these kind of market conditions, it's touching highs, and and the investor also is sitting on good profits. But I think he should ride for some more profits. I expect it to be touching levels of around 170, 175 rupees in, say, next 2-3 months' time. I think this quarter's numbers would be great for auto companies because of the pretty sharp improvement in their margins because of the reduction in the price of metals like steel, aluminium, copper, etc. So I'm bullish on the entire sector, and although much of it has been already played out, but I think there's some more steam left. So he should hold on to it.
This one is coming in from Harish. He's writing to us from Bangalore. He's asking, is the lower rupee value, if the lower rupee value would affect the share market in any other way? Kunal, that is definitely for you. And he's also asking about ICICI Bank. He's bought 100 shares at a price of 800 rupees per share. He wants to know whether he can average at this point in time. And since I have asked you the first question on market, let me also club what Sagar is asking. What Sagar wants to know, he wants a view on a Nifty index. He's saying that, yes, there are a couple of stocks which have a higher weightage on Nifty, and therefore any up move in these counters leads to Nifty going higher. So he's saying in that backdrop, does it make sense to stay invested in Nifty, look to invest in Nifty names, or look at smaller, broader markets or any other sectors in per se?
Oh, 3 questions. So I'll try and keep it as crisp as possible. So on the market view and then clubbing it with the weightage on the index stocks, it's bound to be that there are times when an index opens with a an equal proportionate kind of weightage for stocks, but then as of now the market tends to like certain set of stocks. The weightage of course gets a bit more skewed. That's natural for any kind of an index, not just for Nifty but across the globe and across various different indices as well. So it's a way in which the indices, they tend to function not just from a short-term play but more from a longer-term play. The reason for the market selling off big time is because majority of these stocks, the likes of HDFC Bank, Kotak Bank, etc., are the ones where you're seeing a lot of FII selling. Even the Bajaj twins added to those names. So yes, there is some sort of a skew, but then I believe that those are part and parcels of trends, near-term as well as short-term trends. Coming to the market view, I'm expecting the indices to consolidate 15,600 to 16,000 as a broad range because of the straddle shorting. Coming to ICICI Bank, I think at 700 odd mark, I think it's a classical risk reward to buy the stock. So what you're doing is you're trying to buy one of the best stock from the banking name. So even if it's an underperformer for a certain period of time, that's absolutely fine because the stock will eventually tend to catch up and go back to its earlier behavior where the stock has been a classic outperformer. So I would suggest a buy on ICICI Bank or a hold.
All right. Well, that's a comprehensive view, I think, on several questions that Sagar asked. It is time for us to slip into a very quick break. But on the other side, we will continue to take your questions, so do stay tuned.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can any...
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we have our experts with us, Kunal Bothra as well as Vikas Sethi. And let's continue with the query segment then. And this one is coming in from Indumati. And among CDSL, Angel One, CAMS and other similar stocks in the sector, she wants to know which one is the best bet for the long term. Vikas, tricky to pick only one?
Really tricky to pick only one. They're all good quality stocks and have done really well over the last 1 or 2 years. We've seen influx of a lot of new investors in the market, and these are all beneficiaries of that. So, but from among the three names which you mentioned, if I were to pick one, I'll go with CDSL.
Coming back to you, Vikas, on another counter, we've got a question coming in on Trident. And Subhash Suryavanshi from Ahmednagar has bought this at levels of 56. He's asking if this is a good level to average for the long term.
Yeah, he's bought it at a high price, and actually most of the textile stocks have corrected sharply over the past few months because they were certainly beneficiaries of the China Plus One strategy plus the PLI scheme which the government had introduced. But recently cotton prices had gone up quite high, and that was playing a spoil sport. And I think at the current levels, the stock is a good stock to average. If he wants to remain in textile sector, I think it's a good stock to buy at the current levels, which would bring down his cost of acquisition also, since he has bought it at a very high price earlier. So he can certainly average at the current levels.
Okay. Like I mentioned earlier, also a lot of long-term queries today, Kunal. But let me vet out one more for you then. This one is coming in from Vivek, and he wants to know CEAT. do you think it's the right time to invest in this particular counter?
So I would suggest, to probably stay out of the stock. I think it's been a big underperformer, CIAT, as compared to the other tire stocks. The only name, or rather two stocks where I believe that there's a lot of positive in terms of charts is Balkrishna Industries. I think that's one of the stock which has looked extremely strong. And even to a larger extent, JK Tyres, the stock had done exceptionally well. In fact, it was one of the best performers from the tire space in 2021. Somehow the stock has gone into a sharp correction. But then I believe, possibly over the next couple of years, the stock can make a very strong bounce back. So I would suggest a shift towards either, these two names.
BKT, it's actually an interesting story. I'm curious, would you say the same, Vikas, on the fundamentals? BKT is a good buy?
Balkrishna Industries has been performing well, and fundamentally it's a good stock, and it mostly trades in off-highway tires, and that's a good segment if you look at it from the tire sector per se. And within the sector, I think Balkrishna is fundamentally a good company, but from among the tire sector, if I were to pick one stock, then I think one should go with Balkrishna would be one. The other would be JK Tyre, which I like. So these are the two stocks which I would like from the investors to invest from a long-term point of view in this from the tire sector.
Okay, this one also is for you, Vikas, and this one is from Nino, and he's doing a monthly SIP in Reliance, Asian Paints, Infosys, Titan, ICICI, and Hindalco. These are all the large cap names, so he wants to know which small cap or mid cap stock can he also add into this SIP portfolio of his. He's looking at Coromandel. Do you think that it makes sense?
Firstly, she needs to be congratulated for identifying good quality stocks from different sectors to be doing an SIP. So I think that would augur well for her. The stocks which she has identified and doing an SIP, and I think over a longer period of time, they would generate very good returns for her. And as far as Coromandel International is concerned, I remain bullish on the stock. I like the stock. It's a good company. It's a Murugappa Group company, and from within the fertilizer space, it is one of the favored pick. And the space is also doing well. So she could certainly add Coromandel International from the mid-cap space to be doing an SIP. No problems at all.
Aziz from Karnataka is asking a question which I can probably answer on behalf of Kunal, but I'm still going to ask this question. He's asking whether it's a good time to make an entry into Tech Mahindra for a period of 1 year. Kunal, the answer is yes?
Yes. Yes is the answer to your yes.
But why? And what levels are you looking at?
So, TechM is one of the more, I would say, a very quality and a hidden kind of a stock. We don't generally talk of Tech Mahindra in the same breath as, the likes of Infosys, HCL Tech, and, TCS, etc. But, Tech Mahindra in the last 1.5 to 2 years, you look at the last decade for the stock, it's been an exceptional price mover, for itself. I remember, I think 2015-16, the stock was almost at 200 rupees or 220. In fact, sub 200 rupees, I remember clearly. And from there, the stock has given fabulous kind of returns for itself. So it's a stock which has done exceptionally well on a longer term play. And if you're trying to take advantage of this 30-40% correction into these IT names, then TechM has to feature into one of your top lists. So completely agree with your statement and would be bullish on the stock.
Bullish on Tech Mahindra is the call coming in from Kunal. Moving on, and this one is coming in from Srinivasan. He's writing to us from Chennai, and he wants to know about Saskin. Does it make sense to invest in this one for the longer term? And his long term is 2 years, Vikas.
Mid-cap IT stock, and more focused on the telecom sector. The company is good. The stock has also corrected in line with the market and in line with the correction which we have witnessed in the IT sector. I think at the current levels, the stock trades at pretty reasonable valuations and should be a good buy at the current levels from a long-term point of view.
So view on Manappuram, we've got Thomas V. George, who's bought 5,000 shares at levels of 160. Vikas, on the fundamentals, what would you say about this counter?
Again, this counter, I would say long-term investors should avoid, because I think most of these gold financing companies are facing a lot of competition from the PSU banks also these days. And within the NBFC space, if one has to invest, then I think if one is a long-term investor, they should look for top quality NBFCs like Bajaj Finance. And if one wants to invest in a new mid-cap NBFC, then I think Poonawalla Finance at the current levels of around closer to 240, 250 would be a great bet from a long-term point of view.
Staying with some gold finance companies, Abhinay has a question, Kunal. He wants to know whether we can look to start or whether he can look to start investing in gold stocks or wait for further decline. Now, I'm not sure whether he's talking about gold related counters like maybe like Titan, or does he mean by gold financiers? But nevertheless, do you think should he wait for some more time for some more correction?
One of the most important aspects is historically, whenever the US markets have entered into recessionary periods, gold and silver have been two bullion asset classes which have done exceptionally well. So possibly in that aspect, assuming if that's a similar case for the US markets going forward, we may probably see the both these asset classes, they may tend to be more resilient, and they can probably shield from majority of the equity correction as well going forward, especially from the US market purview. Now, coming to our markets, I believe that I'll completely agree with Vikas over Manappuram as well. I've also been recommending a complete avoid on the stock over the last many months. I think even at current levels, even though the stock is at a 52-week low, I will suggest an avoid on Manappuram. Muthoot Finance could probably be a better alternative option, but even this stock has been trading with a bit of a sluggish bias for itself, so would wait out for the trends to reverse for Muthoot Finance. The other alternative which you can actually look out for is MCX. I think that stock has done reasonably well. It's not directly a gold linked stock, but then we've seen the whenever gold prices they tend to rally or shoot up, MCX tends to have a higher correlation in that aspect as well. So I would probably prefer that name from a trading perspective.
Okay. I'm coming back to you, Kunal, on Mahindra and Mahindra. It's been in focus over the last couple of days because of the revamped Scorpio that has been launched. This is a question from Preeti Nair, and she's bought at levels of 1090, and she's asking for a target price, and she hasn't specified the time frame. So what are the levels that you're looking at?
I think 1090 could be a bit of a steep price, frankly, to buy Mahindra & Mahindra, even though the stock, see, whenever you're buying a quality name, you also have to understand that you have to buy them at a reasonable level. You can't be paying a heavy premium of buying a quality stock, because then the waiting period for the stock or for you to get profit into the stock would be much higher. So ideally what you should be doing is maybe to try and book out marginal profits over here, assuming if the stock comes to 1120, 1125 kind of a level, and then wait for a stock to get into a corrective phase. There would be periods of corrections where the stock may assumingly say come back towards 1000, 1050 range. That could be a better range to buy M&M and probably a better risk reward to enter at those levels.
All right. This next one that I have is coming in from Bharat Kumar, and he's saying that he has Eid Parry 200 shares purchased at 556 rupees per share. He wants to know what should he do with this counter. I'm guessing that over the short term, how does this one look, Kunal?
I think it looks very attractive to me on the charts, trading at 519, 520 approximately. The last 1 month, we've seen 2-3 big candle moves for Eid Parry when the stock had jumped up more than 8 to 10% on a single day, and that too on the back of some very strong volume. So purely based on that, I would expect fresh buying to come back into this name. And again, from those 1 month swing highs, the stock is down some 5%, 6% for itself. So the entry level at current levels is also very attractive for Eid Parry.
Okay. Abhishek from Kerala would like to know whether it's a good idea to buy Titan for the long term. It's losing ground today, Vikas, but is it a good idea to start accumulating this point for the long term?
Yeah, it's a great company, created humongous wealth for investors and would continue to do so. It's a good business model. Although the stock is in some selling pressure recently, even a big investor like Rakesh Jhunjhunwala ji has also offloaded some of his stake. But I think from a long-term point of view, from the current levels, the stock would do well. So it will be a consistent performer. One can safely invest in Titan for long term.
All right, with that, let's kickstart with the rapid fire then. And the first one coming in from Jaya Krishnan, writing to us from Kerala. She has PTC, purchase at 91 rupees per share for the medium term. What should she do? Hold, sell or average? If average, at what levels, Kunal?
I'll suggest a hold and possibly an average closer to 67.
Okay. Himadri Specialty is the name of the counter. We've got Rajeshwari who's bought and she's looking for a short-term view. Should she hold on, Kunal?
I would suggest to hold on and in fact possible look to average closer to 58 levels.
Okay, Honeywell Automation, is it a good buy at current market price for the long term? What's your take, Vikas?
Yeah, good company, buy on decline would be my strategy.
Wipro is the name of the counter, Vikas. Jitendra from Pune wants to know. He's got at a level of 610, should he average his cost price?
I think it's a great company from a long-term point of view, although things are not working out well right now, but it can buy at these, can average at these levels.
All right, this one is from Shiva Bharat. He's looking to invest in bearing companies like Schaeffler, SKF and Timken. How do these counters look over a period of at least 1 year, Vikas?
They all look good. I said I'm bullish on the auto sector and they are all part of the auto industry. So they would do well. So all three are good companies. You can choose one of them.
Kunal, I'd recommend that you smile because viewers are concerned that you're not smiling. There's a downturn coming. Prabhu is asking about SBI, Sun TV and Tata Steel. He's asking, should you buy for the medium term?
So I think Tata Steel is a very good buy. Even SBI at current levels, I think is a phenomenal buy, specifically if you have a time from 6 months to 1 year.
Okay, Dasar Reddy wants to buy Natco Pharma at current market price. Does it make sense, Vikas?
Again, the stock is beaten down at these levels. I think one can avoid and look for some other opportunity.
Abhinay wants to know about fertilizers and chemical stocks. What's your top pick, Vikas?
Sorry, could you please come again, Alex?
Fertilizer and chemical stocks. What is your top pick?
We recently discussed Coromandel International. That is also a good stock to hold. So that looks good. And apart from that, I think one could look at PI Industries, Chamal Fertilizers. So these are the counters which one could look at.
All right, and with that, we come to the end of the rapid fire. I was really hoping that I could squeeze in one more question, but yes, time's out on the rapid fire and this segment as well. Thank you so much, Kunal, as well as Vikas, for giving us your take on Zomato, as well as taking our viewers through all the queries. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more on the other side. Don't go anywhere.
Would you add to that?
Stock markets is a numbers game.